self-directed IRA versus the ROBS to buy a business. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's AdBits, I'm going to explain if you're looking to buy stock in a business, should you do it with a self-directed IRA or a rollover business startup solution? So before I get started, of course, I'm going to explain the differences between the self-directed IRA and the LLC model versus the ROBS, the rollover business startup solution. So let's start with the self-directed IRA structure. So the self-directed IRA structure is the most popular way for anyone to use their retirement money to invest in alternative asset investments. And if you are watching this podcast on YouTube, I'm sharing a screen now that will show how the actual structure works. Okay, and if you're not watching on YouTube, I will explain it to you in detail, so don't worry. But the self-directed IRA, it's not a legal term. Essentially, when IRAs were created in 1974, the IRS allowed IRA owners to invest in traditional as well as alternative asset investments like real estate. So all the self-directed IRA is a structure that allows an IRA owner to use their retirement funds to invest in alternative asset investments. So unlike an IRA at Schwab or Fidelity or Vanguard, that's only going to allow you to buy traditional investments, i.e. publicly traded securities, with a self-directed IRA, you will be able to buy IRS-approved alternative asset investments. And there's only three things you can't do with an IRA. You can't buy life insurance, collectibles like art, and thirdly, under 4975 of the code, you can't do anything in your IRA that indirectly personally benefits you, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, 50% or more. Otherwise, you can do it. Okay, so you see from a self-directed IRA standpoint, if you're looking to buy a business and invest in a business passively, number one, it has to be less than 50%, right? Because remember, the prohibited transaction rules I just mentioned, if your IRA owns more than 50% of the business, it could be a prohibited transaction, which will bring us to the ROBS in 1 second. So the way the self-directed IRA structure works, if you want to invest in a passive business, like a restaurant or consulting company, software company, whatever, you will open a self-directed IRA, hopefully at IRA Financial, because only specific IRA trust companies can administer alternative asset IRAs. Schwab doesn't, Fidelity doesn't. So you got to use a company like IRA Financial. Number two, we will assist you helping you move the money tax-free, whether it's coming from another IRA or from a former employer 401k plan. We will help you do that. And that's a tax-free transfer rollover. The money will then go from your former employer or your traditional institution to IRA Financial tax-free. And then IRA Financial, as your trustee of the IRA, will then make the investment into the company, whether it's a corporation, LLC. Just note an S Corp cannot be owned by an IRA. And that's an S Corp rule, not an IRA rule. So the S Corp election would be invalidated and that S Corp would turn into a C Corp. Just something to keep in mind. So IRA Financial will then make the investment into the LLC or Corp. The IRA would own it. The income and gains would generally flow back to the IRA. If it's a corporation, the dividend tax-free. If it's an LLC and there's more than $1,000 in net income, a little known tax known as UBIT, unrelated business income tax, could be triggered. That's something we'll work with you to minimize or even reduce. And then when you sell the stock or the LLC interest, it should be tax-free back to your IRA. So again, has to be passive, has to be less than 50%, no S Corp stock. Now let's go back and look at the ROBS structure. With the ROBS, a ROBS takes advantage of an exception of the tax code under 4975D as in David 13. And the reason the transaction under ROBS or rollover business startup solution, again, just a name, it's not a term of art, it's not a legal term you'll see in the tax code. You can call this qualified employer security structure, IRA, 401k, corporate structure, you can name it anything you want. The bottom line is, the reason this works is because if you can satisfy an exception to the prohibited transaction rules under D as in David, then you're not subject to the prohibited transaction rules under C as in Charlie. And C as in Charlie are all the stuff I mentioned, like you have to own less than 50%. You can't get paid by your IRA, can't buy a house and live in it. All the basic prohibited stuff that you would expect, that is found under C. But if you can take advantage of an exception in D, you're good. Now, the most common The exception is the loan. So you can borrow from a 401k without triggering the prohibited transaction rules because 4975 D1 says you could. And there's some other exceptions for earning commissions if you're a financial advisor, things like that. But from a ROB standpoint, D13 allows a 401k to buy what's called qualified employer securities, which is C Corp stock, common stock from a C Corp. So what the ROBS does is it allows you to invest in a business that you own more than 50% of. You want to be active, so you can actually earn a salary from the ROB structure, whereas in the self-directed IRA solution, you have to be passive. And if obviously you can't own more than 50%, if you own less than 50%, you technically can earn a salary, but you obviously are limited to your activity level and ownership level. Whereas a ROBS, you have no such limitations. You do actually have to be an employee because in order to participate in a 401k, you have to be an employee of the business. That's why if you own Apple stock and you don't work at Apple, you can't be a part of the Apple 401k because you're not an employee of Apple. Same goes here. You need to be an employee of the corporation in order to adopt and be part of the 401k that's adopted by the corporation. So the ROBS is pretty simple. IRA Financial will do it all, don't worry. I actually wrote a book on this called Turning Retirement Funds into Startup Dreams. It's actually right here. Pretty good book. It's gives you everything you need to know. But this podcast will also pretty much explain in a nutshell what you need to know. So step one, we set up a C Corp. If you already have a C Corp, great. Step two, we adopt a 401k, not an IRA, a 401k. Step three, we're going to help you do the rollover from a former employer, pre-tax 401k, a Roth 401k, or from another pre-tax IRA to tax-free transfer to the 401k. The 401k will then buy the corporate stock, known as qualifying employer securities. And then the 401k will be a shareholder along with other shareholders. You would earn a salary and you'd run your C Corp like any other business for profit you would do. The company would pay 21% tax at the federal level, and then any retained earnings could be dividend back to the 401k without tax. So the advantage of ROBS is you could obviously generate tax-free dividends. If you sell the stock to a third party, there's no capital gains, there's no tax. It goes all back to the 401k without tax. You can then convert your 401k to Roth, or if you have a Roth 401k already, even better. And then you can really shelter all the income and gains from the 401k. So long as you're over 59 and a half and the Roth's been open 5 years, you can shelter it all from tax. So it's a really exciting structure. So in a nutshell, if you are going to be passive and own less than 50%, self-directed IRA is a great solution. And even if you are in the business, you are an executive, you work in the business and you own under 50%, you technically can still use a self-directed IRA. Obviously, the closer you get to 50%, the higher your role is in terms of active services. We just want to be a little bit more cautious. It works better if you're more passive. Now, if you want to own more than 50% and be active, I mean earn a salary, be part of the company, then the ROBS is the only way you're going to do it if you need more than 50K. If you need less than 50K, there's a third option called the solo 401k loan, or just a 401k loan option, where you can borrow up to 50K and then use those funds for any purpose, including funding the new business. So the ROBS and the self-directed IRA are the two most common ways if you want to use retirement money to invest in a business. Remember, no S Corp stock. If you're going to be under 50% ownership, self-directed IRA is a good option. We just need to look at UBIT, whether you want to do an LLC or whether you want to block it with a C Corp. And then if you want to be more than 50% involved and earn a salary, then the ROBS is the only way you're going to be able to do it. Although if you want to own, if you are able to own less than 50%, you still could potentially earn a salary through the self-directed IRA. So again, this is another reason you want to work with a company that's not just going to set up whatever structure they think is what you signed up for. No, you want to actually have someone that can consult with you, could understand what you're looking to do and satisfy those opportunities and get you the most tax advantageous structure. I hear this all the time from people. Adam, I'm in a self-directed IRA. I realize I'm in trouble. I own like 60%. I need to earn a salary. I'm like, who put you in a self-directed IRA? They're like, I don't know. I just signed up with some other company and no one ever called me or talked to me. So I have a self-directed IRA. And it's like, that's not right. We actually speak to every single client and customer that signs up. Because we want to make sure you're actually doing the right structure, because you think you may be in the right structure, but if you don't understand all the rules, which why would you, right? That's why we're the experts. We'll understand them. We'll help you navigate them. We'll help you choose the most tax efficient structure from a investment and retirement standpoint, and what suits you. What works for me may not work for you, because there's facts and circumstances that goes in to determine the most tax optimized self-directed solution for you. So both the self-directed IRA and the ROBS, two great solutions, but not necessarily one for all. You have to look and work with a team that can get you into the right structure that suits you, because what works for me may not work for you. So again, thank you for listening. Hope you enjoyed today's podcast. You can watch it on YouTube, and you'll be able to see some of the flow charts as to how the self-directed IRA structure and the ROB structure works. You want to see what I look like, and otherwise, it's the same content, but on YouTube, there's a lot of other stuff you can check out too. Some thousands of amazing podcasts and videos on all topics surrounding the self-directed retirement account. So thanks again. Have a great day. I'll see everyone again next week. Ciao.